Today, we're talking about breakouts, how you can trade a breakout, how you should place your stop, your entry, and all that fun stuff. So this is a very important lesson, and I want you guys to really listen. I want you to really listen. We're looking at the chart, but we're listening, right? If you want to learn, you got to listen. So let's talk about the idea of a breakout. Now, a breakout can be either, going up or going down. Remember, we don't care if the market goes up or if it goes down. People have this idea that if the market's going down, it's like scary and, oh my God, I'm going to lose money. But remember, we're trading futures. So we don't care if the market goes up or if it goes down, to be honest. We care about movement, up or down, because we can go long and we can go short, right? We can do both those things as a trader. So we're not focused on just one type of move. Let's take this for example. This is a perfect kind of example. What we're looking for here is number one, we identify the trend, right? The trend is moving down. We've already identified that. We know that this is what? You guys should already know. You've already watched the other videos. If you're watching this video right now, you should know what we're looking at. This is a bear flag, right? We had the pivot point down here as well. That bounced us up there. So we had the pivot point acting as support. We bounced back up. Now we're looking for a break of this trend. So just again, make it simple. We've got our trend, we've got our channel, our flag, we got our pole, flag, bear flag. Now we're looking for a break of this overall trend. You might say, well, Patrick, like what about this little candle, right? This little candle right here, it broke the low of this candle. Well, it's just not clean enough to really take that there. So we want to make sure that we're identifying the trend up on this 2-minute chart right here. This is the 2-minute chart we're looking at. Probably go to the 1-minute chart and see it even better. But basically, we're looking to have a convincing move back to the downside. So there's really two ways to play this. You can play it for the initial break, like right there, the break of the channel. When I say breakout, like I said, we're talking about breaking out of a channel, a flag, things like that. So as we're looking for the break down here, we got the 30 right there, that 30 level. And then we've kind of got these like lows of these candles. So as we kind of break down there, we then get down here. So you could basically take the break of that first kind of break through that trend line, like into this candle, or you could wait for kind of a confirmation of that move down, which would have been kind of like the flag, the break, and then another little mini flag here, like a little mini flag, right? That breaks and then moves down. So it's really just about trying to, number one, be patient, wait for like a very kind of clean setup. The more that you can wait, the more that you're patient, the better. You don't always have to enter for, the first initial break. You can wait for a retest. Today was a really good example on the 15-minute chart. We pull this up, 15-minute chart right here. So the market opens, there's our first candle of the day, right? So the first candle of the day, it starts to break to the downside. All right, we know that the low of that 15-minute candle is right there. So you can see it did just kind of break straight through all the way down there to the VWAP, but it then retested that level. So you could just play it right away with your entry there and then your move down. Your stop really on this first initial entry. Look at the 1-minute chart here. Your stop is kind of like right above the high of these candles, 10 points or so. So you're basically like risking above the high of those candles. You really want to enter a trade knowing kind of what your risk is with everything. Sometimes with breakout trades, you don't always get the best risk to reward. The risk is going to be a little higher than the reward sometimes, and that's not always your best idea. But again, we're trading with the trend and we're trading with the flow. So sometimes you don't really need that 5-to-1 risk reward. You just need a solid target, a solid break to the downside to get that move. Here again, another setup. We actually traded this one. So again, very similar type of setup from the move earlier with the bear flag. We had the pivot point, we had the VWAP. So I love this setup because it's literally 1, 2, 3, 4, 5. 5 moves before finally breaking down there and making that bigger move down. The longer that we can consolidate, getting that consolidation, ding, 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 and then the failed and then the breakdown, the better the move, the better the chance that this does sell to the downside and make that move down. So you really want to be careful. You want to be careful that you're not just shorting every single move to the downside, right? This big move down here, it worked out perfectly if you were short up here for the breakout trade to the downside. But what we don't want to do is we don't want to just sit down here and be like, okay, I'm going to get short down here now. We got a pivot point there, and we just want to be very careful until what? We get that breakdown. Again, great example is to really kind of look at the bigger picture, look at the trend. Go to the 5-minute chart. If you're not so sure about the breakdown, go to the 5-minute chart. If you're not so sure about the trend breaking down, nothing wrong with drawing your lines on a bigger time frame, on the 5-minute chart, the 15-minute chart, and then really you'll get a better idea. Like the low of that candle right there, 99. So if we go, let's go to the 2-minute chart and we'll see how that looks. So you could wait for the breakdown below that 99, which played out kind of beautifully there, 19,000s, and move down. You can look at those bigger time frames for your overall breakout kind of setup there. If I'm getting short here for the break below 19,000s, well, I obviously don't want it to get above this area. I can see there's resistance. So if I'm shorting here, let's say I'm shorting the 20 break there, my stop's at the 40s, I'm risking 20 for the move down here to the 960s, 970s. That's a 50 point, 60 point trade all day. I'll take that. Risk reward wise, it's there, it's rocking, it's rolling. Now if we look here for a bull flag off this bottom setup, we got it right here. Here's your bull flag type of breakout setup. So we push up, we have candle red, red, red. I love getting those like 3 candles red sometimes. Really gives you a better idea of the pullback. Remember, the bull flags, they point down, bear flags point up. So I am looking to enter this trade. We'll go to the 1-minute chart. I'm looking to enter this trade when we break above the high of that previous candle. So this candle, the high was 892 right there. So we break up there and we start to push and we get this big breakout here, and then from the 92s starting to move up. Sometimes you get a little cleaner. This one's a little cleaner right here, getting the break out of the 900s. So if you're entering right here, let's say you're entering right there at 900. If that's your entry at the 900, well, your stop is basically kind of the low of these candles. You don't want it back below there, because if it gets below there, it's a good time it rolls off. So these flags you really want to see, breaking to the upside, breaking out there and following that trend higher there. But again, just kind of looking like, 1, 2, 3, 4 candles on that pullback. The high of that last candle, 901. The high on that candle, 975. So we push up there through the 900s, and that's about a 40-point move to the upside. So again, there's your setup. You're risking 87s. I think that's a pretty good risk reward when you think about it here. Pull up the thing just to show you here. So this would be your long setup. You're risking a little like 11 to 12 points. And your target here on this trade is up into this resistance. So you've got this resistance here at 45. So you're, 40 points or so. Risk to reward. Take that all day. 12 risk, 40 taken. Look how that played out. And then again, pulling back, the trend's still higher. But we're really looking for these breakout trends to, number one, we want to be following the trend, right? We don't want the breakout going the opposite way. Like I wouldn't get short, like on these little pullbacks here, obviously, because remember, the bear flags, the bull flags. Remember the direction here, the trend. We got to follow the trend. We're not just, I think this is a good example, right? We got this like little breakdown bar right there, but that's not that's not a flag. That's not our flag that we want. The trend right now is pointing up. So the breakout trades that we're looking for are these trades. These trades to the upside, not the breakout to the downside. It's pretty simple. If the trend is pointing up, like it is right now, it's pointing up here on this push back up, there's no reason to take these shorts until something really gives us an idea for a break to the downside. Now we got this big trend here. If it pushes up, gets stuck up there, put in a lower high in this area, then maybe there's a short opportunity later. But right now, the trend is pointing up. No reason to short there. The 5-minute chart giving us lots of breakdowns. The best part about this is look at the daily chart here. Same thing. You can apply these breakouts on the bigger time frames. And look at that. There's your daily chart for the NASDAQ. Draw your flags, right? We know the flags point up. Bang. One flag. Two flag. That's 1, 2. Where's the third one at? Oh, third flag. Who would have thought? Again, we draw our little line there. The flag. The low of yesterday being that 113 level. And look what happened today. We broke out of that 19,113. We broke the low of that candle. And look at us go. There's your setup. There's your break through the previous day low right there. Monday, Friday, breaking the downside. The trend following lower. And there was the move. Those flags exist on every time frame. Zoom out, look at the bigger picture, see what's going on, get confirmation on multiple time frames. The more time frames that you can get confirmation of for a breakout, the better. If the small time frame is not looking super clean, look at the bigger picture. Does the bigger picture give you more confidence in a breakout if it does break out? Or do you look at it and you're like, I don't know, man, it just looks confusing either way. Look at these 15-minute candles. Again, these 15-minute candles play out perfectly sometimes as highs and lows for your stops, for your entries. You know, if you're shorting here at the 160s, you see that's the low of that like 15-minute candle. The low was 159 there on that candle. And if we go here and we look, you know, the low right there breaking to the downside. So we stayed basically below that 15-minute candle low. So the breakout trades are still coming in there. We're getting these breaks to the downside, just breaking these out, breaking them out here. So that's the breakout. We're trading the breakouts in the direction of the trend. If you're going to trade momentum, you got to trade with the trend, my friends. Don't go chasing waterfalls. Just trade with the trend.